Welcome to the live stream. Today, we're going to be discussing some of the changes in the risk landscape. Particularly, what I want to talk about is um, over the last few days, we have noticed that there are changes in the institutional flows. This is particularly in the largest tech stocks, uh, like the Nvidia, the Apple, Tesla, Microsoft, etc. Now, how can you figure this out? And how can you check whether I'm not just blabbering something around? Now, if you have your broker uh, platform, stockbroker platform, you log into that, you enter the stock symbol, and then when you look at the fundamentals of that particular stock, they also tell you um, what are the holdings. Basically, um, maybe 70% or 80% of that stock is held by institutions. Next to that, there's also a small table where they tell you which institutions hold how much, right? In some broker platforms, you will also get information within that particular institution, which specific fund holds how much, right? One specific fund maybe holds 1% of that stock. Now, what we did was to kind of analyze and understand what was changing, and this is the I can say interesting part here. Among the Mag Seven stocks, the Nvidia, Microsoft, Google, Apple, Amazon, Meta, um, who else is there? Not too sure. Basically, the Mag Seven. um, and a few other large tech companies. Uh, there aren't that many, I can say, secondary market trades that are taking place, but the funds are basically making block trades among themselves. In some cases, it is moving within that particular firm itself from one fund to the other, or it is moving basically from one firm to the other. Uh, Now, why is this important? I think what is important is understanding the characteristic of these funds. So many of the funds basically hold the stock at least for a quarter, and they will do what is called as a quarterly rebalancing. And when that quarterly rebalancing takes place, the stock holding might change, increase a little bit, decrease a little bit, whatever. But then now what is happening over the last few days and weeks is the character of those funds to whom the fund basically the stock is being passed on, that is changing now. Instead of so from the fund A, which has a quarterly rebalance, and they will most likely hold the stock for 1 quarter at least, it is moving into more shorter term funds, which will um, instead of rebalance, they rotate the capital, right? So which means that they will shift very quickly, right? So when that process takes place, there can be massive price drops. And this is exactly what we want to talk about. So in order to recap this, number one, go into your broker platform, look at the fundamentals of the stocks that you're trading. Underneath, you will find basically the institutional holding, or I can say maybe a kind of a table that says maybe 76% of the stock is held by financial institutions. and promoters hold maybe 3%, 2%, whatever, and then there's basically there's a retail pool which holds X percentage. Whatever that sort of a table will be there. In some of those brokerages, you will also see a breakdown of which institutions are holding that particular stock and how much they are holding. And you might also be able to double click on that and see within that particular institution, is there a specific fund that holds this particular stock? Um, and if it is held by multiple funds within that particular institution itself, it will give you a breakdown saying these are the funds. Now, what are we seeing and why is this important? Now, let's start off by talking about the character of the S&P 500 itself. The S&P 500 is a market cap weighted index. So what this means is the higher the market cap, the higher the weightage that particular stock has on the S&P 500. Now, the Mag 7, basically the largest technology firms like Tesla, like Nvidia, Apple, Microsoft, etc., are 35% of the S&P 500. Now, S&P 500 is 503 stocks, 500, but actually 503 stocks. Now, these seven stocks are 35% versus the remaining 496 stocks are 65%. Now, that's the nature of that index, right? I'm not saying that is wrong. That's the nature of the index. But what this means is that it's no longer a true barometer of the economy. It's a barometer for the tech sector because that's where the weight is. So uh, basically, the remaining 496 stocks are most of them are fairly valued. If you go pick and choose, basically within the S&P 500, I'm sure you will find maybe 25, 30, maybe even 100 stocks that are fairly valued. Right? Take a reasonable price earnings ratio. You will be able to find 25, 30 stocks which are fairly valued, uh, worth investing, etc. But then, just looking at what is happening over the last few days, last few weeks, etc., and how this is basically progressing, is the shares of these largest tech companies are moving between funds in block trades, and those block trades are going from funds that would hold the stock for a long time, like mutual funds that will hold the stock for at least a quarter or maybe continuously for a year, whatever. It is going into other funds that are likely to rotate the capital, which means that it's likely to have short-term kind of a strategy. So they might just dump this stock very quickly. Why do we need to know this? We need to know this because if we are investing in an index, uh, we need to know the character of that index. And on top of it, when the S&P 500 moves, it sets pretty much like a ripple effect onto other indices, not only in the US, but around the world, right? So whenever there is any changes in the S&P, you will see the FTSE also kind of mirroring that. You will see the DAX going pretty much in tandem. It might not mirror exactly, but you'll see the shift. Uh, Now, when I talk about this particular aspect, I've always said, your tech stocks are overvalued, not the entire US economy itself. I'm not writing off the US economy as a whole. I'm basically worried only about the fact that because it is overweight and because of the fact that it is likely to undergo some short-term changes, And when that change in the S&P takes place, yes, it does give you an opportunity to buy some of the fundamentally sound stocks at a discount. Obviously, a fund like us will definitely use something like that. But what it also does is it creates that ripple effect. So if you're holding on to maybe an index fund in any other geography, you're likely to see that effect as well, right? Uh, Basically, that is something that I wanted to, first of all, highlight. Secondly, a big, I can say, um, issue, whatever I want to call right now, is this nonsense around this government shutdown. Because we are right now trading pretty much like blindfolded, right? We don't have the uh, data coming in, except for data that comes in from maybe let's say other universities, from various other companies like MSCI, example of those. That data is available, but that's not a complete picture, right? So that means that traders are in a blindfold right now. When that shutdown kind of relaxes, and when data becomes available, you could see a correction, definitely, because traders have been blindfolded for the last few weeks. They're probably going to continue for uh, maybe the rest of the month. Um, so somebody said, based on some sentiments that we were seeing, basically quick sentiment analysis that we do, what we find is that there is a expected drop because been pretty much blindfolded for an extended period of time. So there's likely a drop. This week, you're likely to see some market correction for sure, right? Why do I say that? Monday opening gap was pretty positive, and Monday actually the S&P closed uh, positive in the sort of positive territory. Uh, Today also the expectations seem to be a positive opening gap. Now, what I told you about the block trades to start off with, that's the point that I want to convey, right? We don't know when those block trades will materialize into a dumping. And when that dumping happens, 35% of the S&P is these seven tech stocks, and that's where the risk is concentrated. So when that changes, then automatically you're going to see maybe a massive fall. So one of our analysts essentially kind of estimates that the value at risk for the S&P this week itself could be minus 9.3%. Um, when we when we kind of look at it holistically, the S&P has had drawdowns of 14-15% in the past. Liberation Day, 17% drop or whatever, right? So this isn't surprising. But what is surprising is it's not going to be just one single drop, but it's going to be more sustained. Uh, Second factor to also look at is, um, as we all know, um, traders like uh, certainty in the way they operate. And the period between April and now has been the most volatile, right? From a policy announcements perspective, tariff announcements perspective, there is executive orders, there is, uh, suddenly there is a recall. There is no shortage of action, right? This is basically governance by Twitter or governance by X or whatever you want to call it, right? This is a um, pretty much of a cannonball uh, of policy decisions. So that means that many of the traders have baked in a lot more uncertainty. right? Now, if things are clearer, we don't bake in that much of uncertainty into the pricing that we take. Now, with this kind of muddy waters that we are in, uh, and we taking in that much of a risk premium, whenever things become clearer, there is a price drop possible, right? That's exactly how things work. Uh, Having said that, now what are we expecting this week, and what did we see last week in terms of economic data? I'm just gonna quickly have a look in terms of what we saw last week. There was a lot of gaps in terms of what we got, from the uh, economic data perspective. There's only consumer sentiment preliminary numbers that we got. Um, University of Michigan. So that came out pretty much close to the expectation, actually slightly on the higher side, the expectations. So that shows to a certain extent that we are still blindfolded. We haven't had any more data releases. So this week, currently as of now, we've had UK's unemployment numbers coming in slightly above the expectation for 0.8%, slightly above. It's not too much of a problem. Um, but um, what what we also need to look at is retail sales month on month, US, UK, European Union, etc. What is happening, from that perspective? In the US, we also need information about the housing markets. So expected data release um, coming in essentially Friday, but that won't happen uh, because of the government shutdown. So traders will need to make assumptions and work on that. Right, we don't have a choice right now. Housing starts, retail sales, um, also the PPI month on month numbers. You're not going to get numbers this week, so we'll have to fly pretty much blindfold. Now, I want to talk about uh, how we are tackling many of these sort of data gaps, etc. Now, as I said, you and I can go into the broker system, look at which institutions are trading, etc. What we can do is we can do that at scale. So I don't need to look at this screen every time, put in each and every stock symbol and look at you know is there an institutional trade that's actually taking place. I can do that programmatically, and I can get that information in front of me in a nice dashboard. Now, with that, what happens is our decision making is much faster, and we are able to quickly move things around. Secondly, because we are an active manager, uh, we tend to make decisions on a sort of discretionary basis pretty much the same day, right? Uh, when sort of data is available. Now, all along, since last year when we started, all along we have focused on UK investors only, and that too only individuals. I would say professionals, high net worth individuals, and a few family offices. A couple of family offices already signed up with us, but other than that, we also talked to a few more family offices. Now, what we are doing right now is we are going institutional. What this means is we are tying up with another institution. So the Helix Transaction Capital Partners, the fund becomes their series XXX, whatever fund. And this then allows us to take investors from around the world. Number one, global investors can invest in the fund. Secondly, uh, and And more importantly, there's a large market in the US for hedge funds. So we want to tap that. So US investors can invest into this fund. Uh, Secondly, this gets us onto an institutional platform, which means that we'll have a prime brokerage account, we'll have an admin, we'll have auditing, we will have um, access to various capital introductions. So with that, financial institutions can invest into hedge funds like us. Uh, so why is that important? That gets us from where we are into an institutional grade fund very quickly. So with this regulatory hosting company that we're tying up, it's almost like a pod kind of a system where we go plug in, we continue to trade our strategy, but they take care of all of this for a fee. But here is the good part. Um, Now uh, we are opening up an opportunity for you to invest in our Helix research, the GP firm, to support this particular transition. Now, for that, every pound that is invested in this becomes pretty much 5 to 7x, 5 to 7 times of what you invested in about 5 years, because you are then eligible to take pretty much, basically equity partners. So you are now eligible to take a share in our management fees and performance fees that we get. And as the AUM of the fund grows, you are also growing as an investor. So that's an opportunity to first of all to consider. I'll be writing in more detail about this. Uh, Secondly, what I also want to talk about is while Trump has been talking about relaxing environmental regulations here and there, and he's asked the Environmental Protection Agency to relax some norms for fossil fuel projects and all that. There are over 1 million gas wells in the US which are abandoned. Okay, so you can't produce any gas from them, right? It's already been sucked out and it's lying abandoned. There are over 1 million of them. And these million of them, what they also do is they leak some natural gas. Okay. Now, why is that dangerous? Because that leaking natural gas can catch fire, right? Uh, why am I talking about this? That is because there is an opportunity to cap that natural gas, use it for something useful, right? And again, that's an opportunity for investors to invest in this and make quite a good return from this particular opportunity. Uh, why is it why is it important? Now, the firm that we are talking about, they are looking at about 1,000 wells, but in reality, there are over 1 million wells that are abandoned. So, uh, is that an opportunity here? Absolutely, right? How big is that opportunity? I can say it's at least a 500 million to a 1 billion sort of an opportunity. Uh, Starting off with investments of, I would say, 1 million plus right now, to about 5 million. It can quickly grow into a 500 million to a 1 billion sort of an opportunity, very very rapidly. If you want more information, talk to me, and I can give you more information about this. Another opportunity that we also have is if you've gone to the recycling center um, in your local borough council, um, or county council, wherever, right? Uh, you will find that they collect a lot of plastics, and that's a huge dumping area with a lot of plastics. They can't do anything with it. Most of the plastic that we collect, uh, at home, or even the industrial wasted plastic, can't be recycled. So what do they do? They typically send it to incinerators to burn, and it produces some energy, right? What if um, that incinerator, can be more environmentally friendly, meaning it's not going to produce all these nasty gases wherever it is. Um, and what if the output from that particular process, instead of the incinerator, there's a process that is used to convert this wasted plastic into something useful? What if that output is something that you can fill into your car and drive around, right? Hydrocarbons, basically. So, again, if you're interested in this opportunity, give me a call. We'll talk about it. I can put you in touch with the founders. And it's a very interesting opportunity, very interesting proposition for somebody to invest into this and be a part of the future that we want to build for everyone. So, uh, four big updates, right? One is basically the risk landscape is changing, and be aware of that. How the SSP could have some wide swings, so we must be aware of that. Uh, Secondly, our fund and how we are changing this, how we are making this into an institutional fund, and how it gives you an opportunity to be part of that future. Thirdly, abandoned gas wells, and fourth, um, the wasted plastic that your council is collecting, how that can be turned into something that you can fill into your car. Right. Thank you. Thanks for watching. I will post the recording soon, and we'll stay in touch. Thank you.